2008 certainly was a year of anxiety in property and casualty circles, with catastrophes, the subprime mortgage and credit crises, the declining economy, and investment losses. Wall Street and Main Street are still feeling the effects. But how will those forces affect the new year for agents, brokers, and carriers? Joseph R. Lebens, a principal for the insurance consulting business of Towers Perrin, thinks there may be one overriding lesson from 2008 for 2009, and that is risk management.
I think in 2009 you'll see the brokers and companies certainly impacted by what has taken place in 2008. We touched on what we expect will happen to prices, and again, certainly for certain lines of business and certain segments of lines of business, prices need to harden. I think companies will pay more attention to risk management going forward again. They need to recognize that the risk isn't just insurance risk. There's liquidity risk, there's market risk, there's investment risk associated with running an insurance company. So I think that will certainly be a big part of 2009.
Lebens thinks brokers should prepare for their clients asking more about the industry's own risk management in 2009.
It falls on the brokers to really understand what the companies are doing with regard to risk management, because their clients are going to what we call flee to safety. They're going to want to be insured by the best and strongest companies. And as we've seen, you may not be able to rely entirely on the rating agencies to give you that security level that you need. So brokers and agents really need to understand for themselves about the companies and their security and the risk management practices that they employ.
Beyond risk management issues, insurance markets in 2009 will feel the effects of the troubles in several segments of the economy, most notably construction and financial institutions.
I think the housing and construction woes that are taking place in the U.S. right now will have a big impact in 2009. We think that construction defect claims will increase, surety claims will increase, and there's the potential too, if unemployment and the economic crisis continues, that we'll see more fraud. There are already 127 security class action suits that have been filed during the 2007-2008 timeframe, with more to come. The fallout in the D&O marketplace is significant. Of the 127 class action suits that have been filed, they're not all financial institutions. Home builders are being affected, mortgage originators are being affected, but there's a concentration in the Bear Stearns, the Lehman Brothers, etc.
Heading into 2009, the rising unemployment rate is another force in the economy likely to have an effect on the PC industry. But as Lebens notes, this one is a double-edged sword.
Well, we think the unemployment rising in 2009, if that takes place, will have an effect on one line of business particularly, which would be workers' compensation. Historically, there's two trains of thoughts with regard to what happens with rising unemployment and the workers' compensation line. On the one hand, you have employees who all of a sudden will develop a back injury because they are about to be laid off, and well, now they have some coverage and they get some compensation. On the other hand, and actually that would lead to an increase in claim frequency if we saw that. On the other hand, what you have is that the companies, or that the employees that companies keep are the more experienced workers, and those workers are less apt to file a claim because A, they're more experienced at what they're doing, and B, they don't want to jeopardize their job situation by all of a sudden being out of employment. It's still an emotional kind of thing when it comes to that situation.